Now, the other section, when you get down through this section, this is where it really gets sketchy because these aren't really costs associated with you. So these are costs associated with real estate transactions, transferring the property to you, and costs associated with home ownership. So when you get a mortgage, when you buy a house or refinance, we take that mortgage and the deed and we take it to the courthouse and get it filed. So those are going to be your filing fees. Now, you're also going to have things called they call these your prepaids. And this is kind of an area where it gets a little bit confusing because what you're paying here is your interest from the day of closing through the end of that month. Now, the other section, when you get down through this section, this is where it really gets sketchy because these aren't really costs associated with you. And let me explain. In this section, what we have to do if you're escrowing for your taxes and insurance, what that means is part of your mortgage payment, and we went over that on page 1, is going to include a payment to your real estate taxes and your homeowner's insurance. So every month, what we do is as you make a payment, we take a little piece of that and we put it into your savings account to pay your taxes. And we also take a little bit out of that account to put it into an account to pay your insurances when they come due. Okay, so when you close, what happens, your escrow company or your title company will explain to us, well, here's how many months in reserves that we need to make sure they have enough money when the tax bill comes due or when that homeowner's insurance comes due. So we have to actually take money at your closing to set it up. So to make sure we have enough funds when those bills come due. Now, the confusing part here is let's say, for example, you hit the lottery after you bought the house, maybe after a week, and you're like, okay, I can pay off my mortgage. So you pay off the mortgage. What's going to happen is you're going to get all that money back because you're now obligated to pay those when your real estate taxes come due and your homeowner's insurance comes due because your mortgage company no longer is needed and you're not making payments to them each month. So now you're going to pay those on your own. So this is a fee or a cost associated with the loan, but again, it's not really money out of your pocket that you're losing. If you sell the house at some point before these tax bills come due or your insurance comes due, you'll get all that money back.